Hi, my name is Sita. I will talk about the history about Hatta Lega and Top Glove. Hatta Lega Holding Berhad is a Malaysian company specializing in the production of synthetic rubber gloves, which are mainly used in healthcare and drug industry. The company was founded by Kam Hon Kwan in 1988. Hatta Lega began as a single-line production facility and has since grown to become the world-leading manufacturer of knitted gloves, with a growing capacity to produce billions of gloves annually. While Top Glove, a Malaysian rubber glove manufacturer that also specializes in glove, face masks, dental dams, and other production. Top Glove Corporation Berhad was established in 1991 in Malaysia by Tan Sri Dr. Lim Wee Chai. The company has grown from a single factory with a single glove production line to become the largest glove manufacturer in the world, holding a 26% of share of the world market for a rubber glove. Next, we have product and services of Hatta Lega and Top Glove. Hatta Lega specializes in knitted gloves, which are made of synthetic rubber and are known for their durability and resistance to chemicals. Hatta Lega developed BDG technology, which provides an end-of-life solution to knitted gloves without compromising longevity. Hatta Lega's involvement with OEM partnership. Hatta Lega works with original equipment manufacturers to provide high-quality gloves to customers worldwide. While Top Glove, they have the glove and non-glove segment comprising condoms, face masks, dental dams, exercise band, and home products, meeting demands in healthcare and non-healthcare segments. The company manufactures latex and knitted gloves for healthcare providers and manufacturers, as well as household. Then we have customer for Hatta Lega and Top Glove. Hatta Lega is committed to innovation and has capitalized a new wave of demand while exporting high-quality gloves worldwide. They have a wide range of partners and stakeholders, including healthcare practitioners and the people they care for health and wealth. Top Glove, they have a strong customer base, about 200 customers in 195 countries around the world. Top Glove is committed to delivering sustainable economic performance and generating attractive investment return for their stakeholders through strict but fair and transparent procurement practices in the selection of their suppliers. Top Glove has a dedicated customer portal, which is TG Customers Connect.
Let's continue with the financial ratio analysis. There are two types of ratio for measuring liquidity in perspective 1. Firstly, the current ratio. Current ratio describes the relationship between a company asset and liability. So, a higher ratio means the company has more asset than liabilities. Based on both tiers' current ratio, Top Glove is less liquidity than Hatta Lega. In 2022, Top Glove has only 2.12 times in current asset for every RM1 ringgit in current liability, while Hatta Lega has a current ratio of 3.91 times. Thus, there is a matter of the Top Glove's lack of liquidity compared to the Hatta Lega. Second type of ratio is asset test ratio. It shows if a company has access to enough cash to cover its immediate liabilities such as short-term debt. The acid test ratio for most business should be higher than 1. According to the acid test ratio, both companies increased their ratio compared to the past year. Top Glove has RM0.69 in quick asset for every RM1 ringgit in current debt, while Hatta Lega has RM2.67 for every RM1 ringgit in current debt. This shows that Top Glove is less liquidity compared to the Hatta Lega. Top Glove may not have enough liquidity asset to cover its current liability because its asset test ratio is below 1 in both years. There are 4 ways for measuring a firm's ability to convert account receivable and inventory into cash in perspective 2. Firstly, account receivable days refer to the average time a customer takes to pay back a business for products or services purchased. Top Glove is more liquidity than Hatta Lega in terms of account receivable days in both 2021 and 2022. Top Glove at 16.95 days is slightly faster than Hartaleka at 19.37 days in collecting account receivable in 2022. Therefore, Top Glove is better than Hartaleka because Hartaleka will take longer to collect payment. The firm may encounter a liquidity bottleneck and experience payment issue by no fault its own. For the account receivable turnover ratio is used to quantify how efficiently a company collects account receivable from its client. In terms of account receivable turnover, Steel Top Glove 21.53 times is slightly faster than Hartaleka 18.84 times in collecting account receivable in 2022. Therefore, Hartaleka may have a collection problem from its customer compared to Top Glove. However, Hartaleka collected more account receivable in 2022 than in the previous year. Moving to the next, days in inventory is an efficiency ratio that calculates the average number of days that a company keeps goods before selling them. The ratio counts the number of days that money is held in inventory. Hartaleka carries inventory for more time than Top Glove in 2021 and 2022. Particularly, Hartaleka carries inventory for a longer time, 88.74 days, than Top Glove 79.44 days in 2021. This indicates that Hartaleka could struggle to quickly turn its inventory into sales. Inventory turnover is the pace at which inventory stock is sold, used, and replaced. It is used to determine whether a company has excessive inventory in proportion to its sales level. Based on the financial ratio analysis, Hartaleka moved inventory slower than Top Glove in 2021-2022. Especially in 2022, Top Glove transferred its inventory more quickly 8.03 times than Hartaleka 7.79 times, showing that Hartaleka's inventory turnover is less liquidity in 2022.
The operating return on asset is a variant of the standard return on asset ratio. An organization operational return on asset is used to demonstrate how much revenue it generates for any amount invested in the asset it uses to run its day-to-day operation. In 2021, Hartalega generates 0.56 cents of operating profit for every RM1 of assets, which is quite a bit less than Top Glove, RM1 ringgit 3 cents. Top Glove received much more revenue than Hartaleka in 2021 on the organization assets. Meanwhile, in 2022, the managers of Top Glove were generating 4 cents of operating profit for every RM1 of assets, which is quite a bit less than Hartaleka, 73 cents. In 2022, Hartalega used its asset wisely to gain operating income. The operating margin calculates the profit an organization generates on each dollar of sales after variable production expenses such as labor and raw materials but before interest or taxes. Top Glove 2021 managers are better than Hartalega 2021 in managing the cost of goods sold and operating expenses, as the operating profit margin for Hartalega is only 56.89%. In 2022, Hartalega managers are better than Top Glove in managing the cost of goods sold and operating expenses, as the operating profit margin for Top Glove is only 6.43%. In general, higher operating margins are preferable to lower operating margins. Asset turnover ratio assesses how much a business sales or revenues are in contrast to the value of its assets. Hartalega 2021 is generating 98 cents in sales for every RM1 invested in asset, which is much lower than Top Glove 2021, 1.67 times. In 2022, Top Glove is generating 69 cents in sales for every RM1 invested in asset, which is much lower than Hartalega, 1.24 times. The fixed asset turnover ratio is commonly used by analysts to assess operating performance. An organization's ability to efficiently apply fixed asset investment to drive sales is demonstrated by higher fixed asset turnover ratio. Hartalega 2021 generates RM 3.11 in sales for every RM1 invested in fixed asset, which is lower than Top Glove 2021, 4.13 times. In 2021, Top Glove generated RM 1 ringgit.23 cents in sales for every RM1 invested in fixed asset, which is lower than Hartalega, 3.33 times. Debt ratio refers to a financial ratio that assesses how much leverage a business has. The ratio of total debt to total asset, represented as a decimal or percentage, is also known as the debt ratio. Top Glove 2021 financed 26.19% of its asset by debt compared to Hartalega 2021 financing 27.19% of its assets by debt. In 2022, Top Glove financed 16.31% of its assets by debt and 83.69% by equity compared to Hartalega financing 18.95% of its assets by debt.
Lastly, return on equity can be used to determine if the firm owner shareholders are getting a good return on their investment when compared to its competitors. Hartalika has improved its return on equity from 58.37% in 2021 to 63.31% in 2022. In contrast, Top Glove has declined its return on equity from 133.23% in 2021 to 5.05% in 2022. If we compare both companies, Top Glove is receiving a lower return than Hartaleka in 2022. As a result, Hartaleka shareholders earn a higher return on equity than Top Glove investors.
Okay, the followings are the success factor of Top Glove. The first one is innovation, so constant learning and development, technological development in workplace, and the last one is producing high quality gloves with a low cost technique. We all know that Top Glove has been like able to stay ahead of its competitors by continuously innovating and improving its product offering. So this include developing new gloves variants with improved feature. Top Glove has been able to innovate its manufacturing process, like example implementing a new technologies and system to improve the efficiency, like reducing waste and enhance the quality control. So furthermore, they also like focusing on the research and development to make high quality gloves using an effective low cost technique. So these are the part of the innovation factor. The next one is reputation and image. So reputation and image is crucial for building trust among customers. So Top Glove's reputation for their high quality and really reliable product has helped the company to build trust with its customer and establish a strong brand image. So the company's reputation image can also impact the employees' morale. So Top Glove's positive reputation and image have helped to create a positive work environment, and it also increased the employees' engagement and motivation. Okay, the next one is the success factor for Hartaleka. Investment, research, and development has become a critical success factor for Hartaleka, a leading manufacturer of gloves. Through its R&D efforts, Hartaleka has been like able to develop innovative gloves product with unique features. So Hartaleka has also been like able to innovate in manufacturing process through research and development. This includes like implementing new technologies and system to improve efficiency, reduce weight, and enhance the quality control. So Hartalega also has won like a few awards for innovations, quality, and manufacturing practices. By consistently innovating and improving its product and process, Hartalega has been able to stay ahead of the competitors and maintain its position till now. So the next factor is efficient operation management has also like become a critical success factor for Hartalega, a leading manufacturer of gloves. So efficient operation management has helped Hartalega to reduce costs and increase profitability. By optimizing its operation, the company um, has been increased the efficiency and improved productivity of like all of which have contributed to cost saving. So efficient operation management has also helped Hartalega to bring new product to the market more quickly. Okay, this slide is going to explain on the risk factor for both companies, Top Glove and Hartaleka. So the first risk is operational risk is also a key concern for both companies. Any disruption to the production process such as machine breakdown or power outages can impact the production schedule and output can cause operation disruption. The second one is the shortage of highly qualified personnel is also a potential operational risk for both companies. A shortage of skilled personnel in research and development can slow down the innovation as the company may struggle to develop a new product or process. So the third risk is risk of oversupply. So this risk is as a rubber glove industry becomes increasingly competitive, there is a risk that oversupply could occur. When the market is oversupplied, prices tend to drop as the companies compete to sell their products. So this can reduce the profit margin for both Top Glove and Harthaleka. So next risk is internal fraud is also a potential risk for Top Glove and Harthaleka, where is internal fraud is referred to fraudulent activities committed by the employees or insider of the company. So this internal fraud can result in a financial loss for both companies. So this can occur through the embezzlement of theft or other form of financial fraud. So the last one is cyber security and data privacy are also potential risk for both companies. So as both companies rely on technology, so there are sensitive data that are exposed to the cyber attacks and data breaches. So cyber attacks can result in leaking of sensitive information such as customer data, financial information, or intellectual property that can be stolen or compromised.
Based on the financial ratio provided, both Top Glove and Hartalega has a relatively low debt ratio. In 2022, Top Glove has a debt ratio of 16.31%, while Hartalega has a debt ratio of 18.95%. This ratio indicates that significant portion of their asset is financed by equity rather than debt. Time interest earned ratio measures the amount of operating income available to cover interest payment. Both Top Glove and Hartalega have high times interest earned ratio, indicating that they have sufficient operating income to survive their interest obligation. In 2022, Top Glove has a time interest earned ratio of 81.07, while Hartalega has a ratio of 971.28. This high ratio suggests that both companies have a strong ability to meet their interest obligation. Overall, both companies appears to have a healthy financial structure with a low debt ratio and high time interest earned ratio. They rely more on equity financing and have sufficient operating income to cover their interest payments. Both Top Glove and Hartalega heavily rely on production and sales of gloves. To improve their financial position, they should consider diversifying their revenue stream, exploring new products lines, or expanding into related sectors such as personal production equipment or healthcare supplies can help migrate their risk of over-dependency on a single product. Besides that, investing in research and development (R&D) is crucial for long-term success and financial growth. Both Top Glove and Hartalega should allocate resources to develop innovation products, improve manufacturing technology, and enhance product quality by staying at the forefront of the technological advancement and meeting evolving customer needs. They can maintain a competitive edge and command premium prices. Thirdly, managing financial risk is an essential for maintaining a strong financial position. Both companies should implement robust risk management strategies to maintain potential threat. This includes closely monitoring raw material price, currency fluctuation, and regulatory changes that could impact their financial performance. Building adequate risk reserves and implementing hedge strategies can help minimize the impact of adverse events. Lastly, reviewing and optimizing their capital structure is crucial for improving financial position. Both companies should assess their debt levels, interest rates, and repayment schedules. Exploring options to refinance debts at favorable terms or considering equity financing can help optimize capital structure, reduce financial costs, and provide greater flexibility for the future investment. By implementing this recommendation, both companies can strengthen their financial health, improve profitability, and position themselves for a long-term success in a highly competitive glove manufacturing industry. It is important to note that this recommendation should be evaluated within the specific context of each company's financial situation and strategic objectives, and professional advice may be necessary for their successful implementation.